Welcome to the DeFi Standard, and this is Mickey B. Fresh. And today we have big news. Brad Kimes and myself will be interviewing the creator of the Trustline Credit Network and the Probity Vault right here on the DeFi Standard. And that interview will be released tomorrow, Tuesday, in the AM Eastern Standard Time. I'm not sure exactly what time, but probably 9 a.m. or 10 a.m. Eastern Standard Time. So I'm really looking forward to that. That will be right here on the DeFi Standard. Now, in today's video, I want to go over the new hooks amendment that is being proposed by Vitae Win from XRP Labs, which is the hooks light smart contracts, and it's going to add tremendous functionality to the XRP Ledger. And we actually have some diagrams here that will show how it works. We're going to do a brief overview. We're not going to do a deep dive. We're also going to go through the DeFi Standard blog that Patty XRP recently wrote, and I want to get into that a little, and what is really the future of these next generation stablecoins. Because Aurei is very different from Tether and very different from USDC. These are very different types of assets, and they shouldn't even be called the same thing. They're a decentralized stablecoin, not a centralized, and they have very different characteristics to them. So let's move on here, and let's start talking about the Trustline Credit Network. And I'm going to keep beating the drum with this, and I'm so excited to do this interview with Matthew Rosenden, because this project is built on the XRP Ledger and also on the Flare network. So it's both. So Trustline is creating the first trustless crypto-backed stablecoin issued on the XRP Ledger and the Flare network via the power of the Flare network smart contracts. It also uses the Flare time series oracle, which is very important here, through the Probity Vault. This trustless stablecoin is entitled Aurei, which is A-U-R, is the ticker symbol. Aurei is the advent of an idea from the Flare Network blog series authored by Hugo Filion. And I've done videos on this in the past talking about the decentralized global stablecoin. Now, see, all based on facts. In this channel, we base things on facts, not wild speculation. And now they have come to fruition. So Trustline is seeking to build a crypto credit network for use on the XRP Ledger and the Flare network. Through the Probity Treasury and Vault, users will be able to provide collateral and earn interest for minting Aurei to be lent out to borrowers. All of this is accomplished through smart contracts and the use of an adjustable interest rate that derives itself from the balance between supply and demand, market forces. With the utilization of trust lines and issued currency features, Trustline is enabling the creation of the first decentralized trustless stable unit of account on the XRP Ledger. So this is basically in a complement to XRP. It's backed by the value of FXRP and Spark. But one unique feature that's different from XRP is it has the stable unit of account, which is pegged to the dollar, and it manages that peg in a way based on these interest rates of supply and demand. Now, Probity, we went through this in a video 2 days ago, so I'm not going to go too deep into it. I just want to give everyone like a refresher before the interview here. So Probity is structured as a decentralized banking application, allowing lending, borrowing, and trading of Aurei stablecoin by accessing the Trustline Credit Network smart contracts. Now, there's 3 functions. We went through this in the previous videos, and I will post a link in the description below of that video, which was a 40-minute deep dive into Trustline and Probity. So that has the teller, the treasury, and the vault smart contracts. And all right here. So let's talk a little about the stablecoin and governance token before we move on to the hooks amendment. And then some interesting news out of SBI with XRP. So you want to stay tuned for that. The Aurei stablecoin is pegged to the US dollar and issued on the XRPL and Flare network, allowing it to transact for fractions of a penny and within seconds. So this is a competitor to like MakerDAO's DAI, except you don't pay the high gas fees. And it's available on the XRP Ledger and settles instantly. And it has the Ethereum-based smart contracts, just like DAI does. So it's superior pretty much in every way, and even more so. Additionally, Aurei, through the power of trust lines and issued currencies, can be traded on the XRP Ledger's DEX, providing it with a much-needed stable unit of account for XRP and other issued currencies to trade off of. And that's important here because the XRP Ledger's DEX, any issued currency, say it's the USD or fiat, those are all issued by gateways and they've got a counterparty. So even trading against XRP, which has no counterparty, but it doesn't have a stable unit of account. XRP's a free-floating exchange rate, and it always will be. XRP itself will never be a stable coin. Now, this is why, because you could create a stable coin like Aurei that could do all the things XRP does and have a stable unit of account and use the value of XRP to back it. So it's a complement to XRP. So that's how you have to look at this. XRP, this is why I've been saying for the last year or two, XRP doesn't need to be a stable coin. It doesn't need to have a stable price. It doesn't need to have any of that stuff because other assets can be built using its value and the XRP ledger that are stable. And XRP then can rise in value, which is what we would all want. It doesn't have to be limited. So, and it also gives the XRP Ledger's DEX an asset to trade against, like that's pegged to the US dollar, instead of using a CBDC or a Tether or USDC. Now, the interest rate for borrowing and lending Aurei is flexible due to it's an equilibrium between the supply and the demand. This means market forces will determine the most appropriate rate for borrowing and lending through the interest rate. So we're going to breeze through this a little here, and I'll post this link in the description below. And we got a nice little diagram here on our website, the DeFiStandard.com. I encourage everyone to check it out. It's free. There's a ton of resources on here for Flare Network, Flare Finance, XRP, and DeFi, and also now Trustline and Probity Vault. So now we have the TCN, which is the Trustline Credit Network Governance Token. Can be earned via interest for providing collateral and through trading. Its main function is to serve as the governance token for the Trustline ecosystem, which may put a slight premium on its price, resulting in it being a semi-stable coin. So it's always guaranteed to be at least $1, but will have a premium on it. So you'll earn it like it's $1 interest, and then it could go up in value. TCN and Aurei are the two choices for suppliers of the Probity Vault contract to earn their interest in. So you could choose how you want to earn your interest in Aurei or TCN. However, suppliers may prefer to receive interest in the form of TCN due to the premium that could be placed on its ownership and for governance. The voting power that comes with TCN allows stakeholders to vote on network upgrades, parameters, changes, and collateral types. So here's a little diagram displaying how this system works. So for example here, Probity is the vault. Think of this like right here, the decentralized bank. So in this example, Mickey deposits 1,500 FXRP into the vault. Now the treasury, which holds a reserve of 1,000 Aurei, issues 500 Aurei to Lars. So now, since it's over collateralized by 150%, that 1,000 are there. And now 500 go to Lars. So all Mickey has to worry about here is managing his collateral ratio. The treasury and the teller deal with the whole loan management. Now, I could issue that Aurei to myself and then go do something else with it. But to make it very easy and just to earn interest here, you put in your 1,500 XRP. And now, well, this depends on price too here. So there is, depending on what the XRP's price. I do want to make this clear because I know this question has come up multiple times. When you put your FXRP in this vault, if it goes up in value, you still gain the capital appreciation from it. Now, if it goes down in value, you have to manage your your collateral. And now you'll also be earning Spark while your FXRP is in this vault, because you'll earn the daily Spark rewards for that FXRP you brought over to Flare. So you'll be earning Spark every day while it's in the vault, and then you'll be earning interest while Lars borrowed that Aurei. And he has his own thing going on this situation. I'm not going to go too deep into that because we'll go into it into the interview. So that's just kind of like a base overview. I know you guys are going to have a lot of questions from that. We could read through a little of this here. So Mickey deposits 1,500 FXRP to the Probity Vault to be used as collateral for minting Aurei. Each user has their own vault, as this is just a smart contract to allow users to manage their collateral through. Mickey calls on the Treasury contract to mint 1,000 Aurei. Now this is assuming that FXRP is $1 in this situation. Now, that would be maxing out the collateral ratio. The vault locks Mickey's FXRP collateral in the vault while the Treasury mints the new Aurei and stores it as part of the Aurei reserves. The teller smart contract then receives a bid for 500 Aurei to be loaned out. 500 Aurei is removed from the Treasury reserves, resulting in a utilization ratio of 50%. As 500 Aurei out of the 1,000 Aurei total supply is now loaned out. Mickey receives interest for allowing the Aurei he minted to be loaned out. Trustline features an adjustable interest rate governed by market forces and of supply and demand. In this instance, Mickey receives 2% APY for the 500 Aurei that has been loaned out. As the utilization ratio changes, the interest Mickey receives will increase as demand increases and decreases as supply increases relative to one another. Mickey also has the option to receive interest paid out in Aurei or TCN. If all of this stayed the same over the course of a year, Mickey would receive either 10 Aurei or 10 TCN in interest payable to him during that time for the 500 Aurei borrowed from Lars. Now, this is just a basic overview here. You get this is paid to you per second. Now, 2% is that's just the interest rate given in his example here. Most likely, it's going to be a little higher than that. You could also issue the Aurei to yourself and then go lend it out too in other ways. So this is just one example that's used in this blog post here. All right, so moving on. We're going to get into that in the interview more in depth. I just wanted to give everyone a refresher. So before we move on to hooks, exciting news out of SBI. So SBI financial giant offers XRP as a bonus for acquiring tokens in its upcoming STO, and STO stands for Security Token Offering. So this is in Yoshi Katao's recent tweet, and the press release we'll get to next. It says SBI Group. So the company will be giving a bonus in XRP to investors. So anyone who participates, it looks like, in an STO offering of its digital corporate bonds, the company will be giving out XRP, a bonus to XRP to investors. This is awesome. So now more utility for XRP. So now these corporate bonds, they're going to receive XRP as an additional bonus or reward. So what do we got here? We also know that the SBI was giving out XRP as end of the year bonuses for shareholders. So this is in addition to that shareholder thing. Let's go to the actual press release because it explains it here. So let's see here. So they will be offering, we are pleased to inform you that we have decided to carry out a security token offering. This STO is a self-offered form of a public offering in which the company itself solicits and allocates corporate bond type security tokens, which are digital corporate bonds issued by the company to customers. And let's go through a little. And this is all legal due to the amendment of the Financial Instruments and Exchange Acts related to the government ordinance May 1st, 2020. See, in Japan, they got full clarity, unlike in the US here, where, we don't. The digital bond is issued using the blockchain consortium led by Boostry Co. Limited. Instead of the conventional management, all right, we could skip through that. In addition, customers who have acquired the digital bonds will be granted a crypto asset, XRP, in a quantity corresponding to the amount they hold as a privilege of times 2. This is translated here. So, what else we got? In October 2019, SBI joined the Japan STO Association, a self-regulatory organization based on the Financial Instruments and Exchange Act. In addition, on March 26, 2021, we completed the first change registration in Japan regarding the handling of an electronic record transfer of securities presentation rights under the new act. We hope that the spread of the STOs, which is security token offerings, in Japan will further revitalize the capital market and contribute to the further development of the real economy. Wow, look at that. So look at this. Here they show a little overview of the digital bond here. So you get 10 XRP per par value here. Very interesting. And here's Boostry. I'm going to have to dive into this a little more, but it looks like its investment ratio is Nomura and Nomura Research, and SBI is Boostry. So SBI has a 10% holding in this. And the fact that Nomura is part of this and they're giving out XRP as a bonus. I mean, this is awesome. I mean, more use cases for XRP. I mean, we're dealing with this problem in the US. They're talking about XRP being digital security. Japan's so far ahead, they're already doing security token offerings because they have the rules in place for this, because they have their parliament or equivalent of our Congress have established rules of the game. And there's a self-regulatory body overseeing these securities tokens because they see they want to boost their security markets and their capital markets. In the U.S., instead, we're fighting with our own companies and trying to crush them. So it goes to show Japan's jumping ahead. So to say the U.S. is behind, yeah, we are behind. Here's the facts. Japan's ahead. I mean, there's no secrets here. All right, so moving on from that. So that's more good news. So remember, security tokens and stuff can be offered on the Flare network. I got to look into this Boostry a little more, but the fact that they're using XRP is excellent. All right, so we already went through that. Now let's go on to the Hooks Amendment. Just a brief overview. I'm not going to do too much of a deep dive. So Hooks adds smart contract functionality to the XRP Ledger, a layer 1 custom code to influence the behavior and flow of transactions. Hooks are small, efficient pieces of code being defined on an XRPL account, allowing logic to be executed before and after XRPL transactions. Now, the XRP Ledger is known and is being appreciated for its transaction throughput, speed, and the low fees, combined with available advanced transaction types like multi-sig, escrow, payment channels, and even a decentralized exchange, all on Ledger out of the box without requiring smart contracts. The XRPL has a lot to offer businesses and creative developers. So now, in addition to that, here, Hooks adds smart contract functionality. Now, it's non-Turing complete. So this isn't like, some of you are going to ask, well, isn't Flare doing smart contracts? Why would they have this XRP Ledger? Well, wait a second here. There's certain use cases on the XRP Ledger that could use non-Turing complete light smart contracts to enhance those other transaction types like escrow, multi-sig, and the decentralized exchange. And here, there are some examples that we show here. I think I have it on the next page. See, so hooks are deliberately not Turing complete. While often touting as the holy grail of smart contracts, Turing completeness is actually inappropriate for smart contracts. So By not being Turing complete, it allows the ledger to be as fast and as efficient as it is now. It doesn't add any excess cluttering to that. All right. Now this I thought was pretty cool. So here's some example scenarios of how they work. And I'll post these links in the description below. There is a whole lot of documentation here on the coding side. They go through that. We're not going to go through that today. We're going to keep it basic. So here's an example scenario of, where's the good one? So here, for example, a bank could block. So, for example, Alice is sending 100 XRP to the bank's hook. Bank's hook rejects Alice's payment because Alice does not have an account with the bank, and its regulator forbids it to accept her deposit without AML and KYC. So you could see how this is beneficial to banks plugging into the XRP Ledger and dealing with transactions, and how it helps that. And now here's another one with a scammer. So Alice's hook blocks the transaction because the destination account, so she was receiving this transaction, the destination account appears on a block list provided by an on-ledger oracle that the hook has been programmed to listen to. So that's what XRP Forensics does. They have certain scam accounts that are blocklisted, they call them now. So it would save that. Now here's another one. Hooks also controls an institutional account. This is very interesting here too. Alice sends 100 XRP to an institution's hot wallet. So here's the hot wallet, on-ledger custom wallet. The institution's hot wallet can't receive funds. They are always redirected to the cold storage by the hook. So it automatically pushes it to there. And now here's another example. The hook, oh no, this is a continuation. The hook collects the signatures, then admits the payment transaction of 1,000 XRP. This is a different example. Sorry here. Institution wants to make a 10,000 XRP payment to Alice, but requires 2 signatures to do so. So this allows how it could use hooks, a hot wallet, and a multi-sig. So very interesting here. We know about multi-sig. All right, so there's some examples with that. And here's also a blog that talks about the hooks amendment. So this basically adds on to the multi-sig features, the escrow features, the payment channels, and the decentralized exchange. So it's going to enhance all those capabilities there that exist in a way that doesn't clog the ledger up or inhibit it or slow it down. It's still as fast and as efficient. And now these little things like light smart contracts are going to be a perfect complement to everything Flare's doing. Because on Flare is the EVM, which is the Ethereum Virtual Machine based, full Turing complete smart contracts. So now we get the best of both worlds. We got this efficient payment system with a built-in decentralized exchange with light smart contracts that could execute logic, business logic, and then we have the full Turing complete with the decentralized oracle system built in. This is why no one blockchain is going to rule them all, but a combination of a modular ecosystem of different protocols like Interledger, PayString, the XRP Ledger, its DEX, its gateways, its escrow features, its multi-sigs, its hooks, the Flare network, which is Flare Time Series Oracle, and its Ethereum Virtual Machine. All of this working together, and Interledger, is going to be how you create a full ecosystem and token economy and market mechanics. So that's the other thing. So going back to here, before we wrap it up, is I wanted to touch on this. So here. So some things about the Trustline that I wanted to touch on. So Trustline will be built on Flare. Aurei will be the first stablecoin. Where is it? One more over. All right. So here's the other thing. So to bootstrap the market, Aurei will use an automated market maker, kind of like Uniswap, to set the prevailing wages. So it's kind of like a combination of MakerDAO, Compound, and Aave kind of all put together. And eventually, I know this is not going to happen right away, but in the future, the ultimate vision is we are looking into the possibility of allowing users to buy XRP and Spark in-app with fiat. The goal is still a long ways off, but a key part of our overall vision. So keep that in mind. That's where this is going in the long run here. And back to kick this off is the TCN token right here. So the Trustline credit token this is a new type of token design, and I think it could be very powerful. It's a semi-stable governance token earned by liquidity providers. So by you putting in your collateral, you get to issue the Aurei and then you lend it out. But it does that for you all in the background. So you're basically a liquidity provider of the Aurei stablecoin. TCN represents interest earned by lending Aurei. TCN owners vote and decide on proposals by staking a supermajority of TCN. TCN is the first stablecoin to have voting rights. So it's going to be at least a stablecoin and then have a premium on top of it. So you'll earn it at the dollar rate, but then it will be valued higher or have a premium most likely. Due to the voting rights, a premium may be placed on the price of TCN. However, it's guaranteed to stay at or slightly above due to the voting premium. And governance tokens in the future are going to play a huge role. Now, TCN is a dApp governance token. It's built on top of the Flare network. Just so the Flare network still does the consensus and that security. Trust TCN is the governance token for the Trustline application. Okay, just to clear that up. However, it's guaranteed to stay at the peg. Aurei suppliers have the option to withdraw interest in either TCN or Aurei. So there's a lot of versatility here. And then Probity is the vault that you use to put your assets in to mint the Aurei stablecoin. And I encourage everyone to go to the Trustline.co website and check out some documentation on here and read through it, because this is going to be the gateway to decentralized finance. And what they're creating here is an evolution of David Schwartz's stablecoin proposal. I think this is really huge, and I'm super excited to this interview with Brad Kimes talking to the creator, who is a former RippleNet engineer. This is what they're also building is a credit network. That's the other side of this, and that's what we're going to talk to Matthew about, is that Aurei that you're lending out is part of that P2P credit network, a bankless alternative to credit cards. So this, what we've been describing here, is by you putting collateral up and then lending Aurei out, that supports that credit network. We don't have credit in DeFi yet, and the credit card industry is just, expensive, and the rates are through the roof. So this is the next evolution here, on-chain, transparent, using smart contracts of Flare, and then the capabilities native to the XRP Ledger, which is the trust lines. It's called Trustline because trust lines are native to the XRP Ledger. That's a feature that comes with the network. So on that note, I'm not a financial advisor, and this is not investment advice, but I am Mickey B. Fresh, and I'm out.